Here is something that sounds too good to be true but isn't. A 35-year-old earning $90,000 whose salary sacrifices just $100 a week into super could retire with around $160,000 more, while saving roughly $1,000 in tax every single year right now. In this video, I'll show you exactly how it works and how to set it up step by step. Salary sacrifice means your employer pays part of your before tax salary straight into super instead of handing it to you as cash. According to the ATO, that money is taxed at 15% in the fund instead of your normal marginal rate, which can be up to 45% plus the Medicare levy. Getting this wrong, or never setting it up at all, quietly costs middle-income earners thousands every year in tax you simply didn't have to pay. Start by understanding the core mechanic. If you're on a marginal rate of 34.5% and you take $5,000 as salary, the ATO takes about $1,700, leaving you $3,275. Salary sacrifice that same $5,000 and it's taxed at just 15%. So $4,250 lands in super. That's roughly a 30% bigger amount invested for the exact same pre-tax cost. Before you go all in, know the limit. From the 1st of July 2025, the concessional or before tax contributions cap is $30,000 per financial year, and that includes your employer's super guarantee, any salary sacrifice, and any personal deductible contributions. Go over that cap, and the excess can be taxed at your full marginal rate, which wipes out most of the benefits, so this number matters. Your first real action is to check how much room you actually have. Log into MyGov, link the ATO service, and open the super section, where you'll see your reported employer contributions year to date. Your employer pays super guarantee at 12% of ordinary time earnings, so subtract whatever that adds up to from the $30,000 cap. Whatever's left is the space you can safely salary sacrifice into for the rest of the financial year. Let's make that concrete with Emma, a marketing manager on $110,000. Her employer super guarantee of 12% comes to about $13,200 a year. $30,000 minus $13,200 leaves her around $16,800 she can safely salary sacrifice. She'd originally planned to sacrifice $20,000, which would have pushed about $3,200 over the cap and exposed it to extra tax. Next, model a number that actually fits your budget. Use the ATO's tax withheld calculator to confirm your marginal rate, then jump into your super fund's salary sacrifice calculator, which most industry funds offer under contributions or Grow My Super. Plug in $50, $100 and $200 a week and watch how the tax saving and extra contributions change. Pick an amount that's sustainable every single pay, not just for the next month. Here's why this is worth the effort. If you're 35 and salary sacrifice $100 a week through to 67 at a 5% net return, that stream builds to around $333,000 in super. Take the cash instead, pay 34.5% tax on it and on the earnings outside super, and you'd land closer to $193,000. That's about $140,000 less, just for never setting it up. Now lock it in. Download your fund's salary sacrifice form, fill in a fixed dollar amount or percentage, and hand it to your employer or payroll team. After the next pay cycle, check your pay slip and your super account to confirm the contribution is showing as salary sacrifice or before tax. Crucially, make sure your employer super guarantee is still being paid on your full base pay, because it should never be reduced. This is the biggest myth, so let's kill it. According to the ATO, salary sacrifice contributions must be on top of your super guarantee, and your employer must keep paying your full 12% SG as though no arrangement existed. Your sacrifice salary isn't counted as ordinary time earnings, so it's against the law for an employer to use your sacrifice to reduce what they owe you. If your SG drops on your payslip, something's wrong. A few common mistakes can undo the whole strategy. The first is breaching the $30,000 cap, where the excess gets taxed at your marginal rate instead of 15%. So always leave a buffer of $1,000 or $2,000. The second is sacrificing more than your budget can handle and ending up reaching for debt. And remember, if your income and contributions exceed $250,000, Division 293 adds an extra 15%, so high earners should review this each year. Let's run it back quickly. Understand that contributions are taxed at 15% versus your higher marginal rate. Then check your cap room in MyGov and subtract your super guarantee from the $30,000 cap. Model a sustainable amount with your funds calculator, lodge the salary sacrifice form with payroll, and verify your pay slip shows the contribution with your SG untouched. 5 steps, and most of it is a one-time setup. If this made salary sacrifice click for you, hit subscribe, because we break down one Australian money and tax topic like this every week in plain English. Next up, I'll walk you through personal deductible contributions and the carry forward rule, which lets you use unused cap space from previous years. Remember, this is general information only and not financial advice, so check the numbers against your own situation or a licensed advisor.